for the FMCG sector ahead of the general elections and after a long spate of demand weakness, the question on everyone's mind is naturally, ab ki baar recovery yaar? Well, while recovery is on everyone's mind, let's take a look at the fourth quarter expectations in three buckets. What's the same, what could be different, and what we know. So what's the same? We already know that demand conditions are similar to what we've seen in the last three quarters. Operating profits for companies will grow ahead of revenue. That means there would be some margin expansion. And in the consumer space itself, discretionary would do better than staples. What could be different this time around? Three things. One, management commentary on demand visibility may have a little more optimism than what it has been over the last few quarters. And that's largely because there's been a gradual improvement in rural with contained inflation. But at the same time, there's also some growth headwinds emanating in urban consumption. And finally, the last few quarters have been about good margin expansion. But going forward, levers for margin expansion could also be limited as companies are passing on price hikes and reinvesting margin savings in ad spends as well. Now, what do we know already? From all the updates that have come by, Godrej Consumer has reported high single-digit organic volume growth, double-digit when it comes to consolidated business. Dabur has reported mid-single-digit revenue growth. The stock declined after its update, and Marico has returned to positive growth territory after three quarters. Jewelry, that's shining. Titan on its huge base grew 19%. Kalyan Jewellers saw India business grow 38%, and Senco as well saw a 39% growth in the fourth quarter. So from the staple squad, given the recent trend and analyst expectations, companies like Godrej Consumer, Tata Consumer, Jyoti Labs and Honasa could be the likely outperformers in the sense that it would grow higher than the industry, whereas the underperformance from names like HUL, Britannia and Dabur as well as Emami is likely to continue. For the paint brigade, this quarter will see high single to low double-digit volume growth. However, revenues will be lower than that because the prices are lower because of raw material deflation. But for their near future, it's all about the 4 C's: commentary on crude and competition, which is very crucial. And to wash it all down, from the beverage end of things, one expects gross margins for United Breweries to improve, whereas for Varun Beverages, this quarter may be impacted by winter, extended winter in the Jan to March quarter, but given the heat wave, they may do a lot better in this April to June quarter, the quarter that we're currently in. And finally, the key triggers that we're looking at: any sort of election-related demand boost, prediction of normal monsoon above normal by the Met, and stocks have seen a lot of time correction. Case in point, HUL and Dabur, they're actually at the same levels as they were pre-pandemic. So the question now again, kya ab ki baar recovery yaar? Hey, thank you for watching this on CNBC TV 18. Hope you liked it. For more such interesting news and updates, follow CNBC TV 18 on all the social media platforms.